It's Wednesday, July 9th. Let's level up. Market came in today with a big up open actually after having traded down the prior session and in the overnight. I think it was obvious to me that that up open was a good opportunity to sell into. It seems like when we're at highs, traders tend to like to sell pops, but they are still buying dips. We did see a nice recovery into the afternoon. I had discussed an Amazon trade I did that I was getting a little low in my DTE. Yesterday we had that news that Jeff Bezos had sold shares. I didn't know about that until the end of the day. But I saw the decline in Amazon and I was starting to see some erosion in my profits, and I decided to take the opportunity with today's up move to sell back near reference highs. We did see some responsive selling back near the 224s and we did get a rollback. But overall, I think the stock closed fairly decently. My plan was to sell this into Prime Day, and I didn't get my opportunity because we got the Bezos selling and the stock just plummeted. I looked at the charts and I took the opportunity to evaluate the stock, what I thought it could do, and how I would respond to it. I gave it basically a 50-50 shot of either having an up open like it had today, which was the best case scenario, and I used the opportunity to close the call spread, or I thought it could either stagnate here and or continue lower. Now, if it would have stagnated, my plan was to let the upper strike bleed out a little bit. If it did pull back, I'd either stop out of my positions based on the share price, and if need be on an aggressive move down, roll down the upper strike, but I would have been stopped out way before that was necessary. So it was basically, if it stagnated or pulled back, let the higher strike bleed out and see if there's a recovery. If not, just close out of the position with some added time decay from the upper strike. That's the difference between somebody who's trading regularly to make profits in the market as opposed to the gambler mentality where you just leave it on no matter what and are willing to even take 100% loss or even a very steep loss. That's not the game I play. I like to take the short gains regularly over time and mitigate my potential downside. Given the fact that the stock was near my upper strike and well into the money on my lower strike, I thought it was the opportune time to take those profits and then reevaluate. I still like buying Amazon, but I will be waiting for dips. As far as futures go, markets were able to get back up to the 63.13 level. Basically, that 63.0675 to 63.13 has been a resistance zone, and it still maintains to be so. Bulls will need to get up and stay up over there for still higher prices. Anything below there could see a liquidation break, and we are actually seeing a little bit of a pullback in the overnight session. Today had a bit of a rich close, 62.94 half. That has been achieved now in the overnight session. Technically, it does need to repair in the RTH session. The apples to apples on the Qs, 22,998. Also being traded through, but again, does technically need to happen during the RTH session for repair. A little bit of lower highs in the afternoon, more pronounced in the Qs, but I still think that the market is treading water up here near highs and debating whether it's going to go still higher and hold the breakouts or come back below breakout levels and have that look above and fail. And of course, still keep us in the responsive market as opposed to an initiative one, meaning where we get over resistance and extend as opposed to get to resistance or a little above resistance and then come back below. The must holds on pullbacks are the intraday pullback lows at 62.76. I think the market is still healthy above 62.65 half, but does get dicey below there. The apples to apples in the Qs are very simple. They need to hold 22,919.75. That was the pullback low. That is actually a test into range, which of course would be 22,934.75. Anything below that 22,934.75 does get increasingly more bearish. We looked in and failed and had the rally back higher, but if the look below and fails, then it starts getting problematic. As far as SPY goes, we're just riding the channel high here. I had said in the midweek video that I thought the market was still fine. We're still above the 10 MA, currently 618.03 and rising. And even if we pulled back to the 613.23, it would still just be a check back to the breakout. The maximum allowable pullback, I think, before things start getting increasingly more bearish, the first line is 613.23 and then 605.06. That zone is the must hold, or else I do get increasingly more bearish on the market. 2 times range on the upside is 658.82. It is possible we grind up there, but I don't think it's going to be a straight shot, and I would be surprised if we don't get a check back to the breakout before extending up there. As far as Qs go, new all-time high today, incrementally, still acting well, 10 MA there to me is the must hold at 550.17. If you want to use the smaller 2 times range at 550.201, I'm good with that, but I think 10 MA is the better one. If there were an apples to apples check back to the breakout, that would be 540.81, and I think between 536.88 to 540.81 is still okay. Maybe there's an overshoot to 531.65 to fill the 623 gap, but my guess is that'll be bought at least the first time, and it'll probably line up with the 50 MA by the time we get there. On the upside, the 2.618 is 958.24, so that could be on deck. I don't think it's going to be a straight shot, though. It's very hard for markets to decline when you have stocks like NVDA making new all-time highs and seemingly in beast mode. The 2.618 upside target I've been looking for is 170.55. I would not let it get back below today's low of day. If you're full boat, I'd stop out of at least some below 161.16. 10 MA there is a good must hold at 157.61, and guessing the 20 MA would be a buy the dip on the first test, currently 151 and rising. I had mentioned Amazon before, and I've been seeing resistance in these 224s. If it were to go to channel high and do it tomorrow, we'd be looking at 227.65. I'd probably be an interested buyer if we made a move back down to the channel low, currently in the 213s, at least for a reload. Apple's been very choppy, but generally holding. I think the buyback has a lot of people scratching their heads because there haven't been such great headlines. I think as long as it can hold the 203.93 to 208.42, it's still healthy. I think that 214.66 up to 219.38 will remain resistance until it doesn't. I do ultimately think it fills the 223.89 gap, but I don't know if that's going to come on earnings or maybe even more likely closer to the iPhone launch. I would view a pullback on the 731 earnings as an opportunity to buy the dip because that isn't historically a great quarter, and there often is some weakness, but it is usually buyable because the iPhone comes out in a few weeks after that. Google's been a little bit dicey, but holding serve. Currently the 200 MA seems like the key support at 172.97. I do still see resistance in the 191.11 to 191.64, but on the upside, this actually has the most potential, I think, of the Momo names that have lagged. It could make a move back up to the 192s. That would line up with the 78.6. It could happen on earnings. This quarter tends to be a little bit iffy, but I think if these stocks don't come in on the blazing highs, there is some upside opportunity. Any move over the 181s that sustains is a clean breakout. So you may want to be the second mouse waiting for after earnings. If there's a move above and fail, we could come all the way back down and retest reference lows, possibly as low as 167. Tesla, very dicey. Shareholders don't like the Elon Musk get back into politics. 291.85 is the must hold. If that fails, we could see the 271s. It would not surprise me to see it rally back up to the 319s if there's some good news, but I still think we're in a little bit of post-sell the news on the robotaxi. Often the execution doesn't quite line up with the promises. Keep an eye on TLT. Nice rebound today. I told you I thought we would be seeing some of that. I think if you're long now, you could use the 50 MA as a stop on part at 86.63. On the upside, the 100 MA has been the key resistance and the must clear, 88.18 and falling. Dollar trying to bounce, but it is still caught between the 10 MA at 97.148 and the 20 MA at 97.671. So either a break over the 20 MA for a long or a break back below the 10 MA for a short. It looks to me like it is trying to stabilize around here, though. Bitcoin, often the market leader, meaning that it can catch fire or it can break down ahead of stocks. And it made a new all-time high today. Very nice. Bulls now need to hold 110,150. If you want to be a stickler, you could say 111,220. Anything over 112,234, though, does keep channel high in play, and I've told you that by the time it gets there, now it could be close into the 130,000s. I think that is likely ultimately on deck here, particularly if the breakout holds, but just make sure that breakout holds. Now, if Bitcoin becomes initiative, meaning it isn't responsive and selling off at the old highs, which it now has a couple of times, that could be an early indicator for the market having a blow-off type of move. We are going to start earnings next week, starting with the banks. I don't love that they're coming in close to the highs. Any pullbacks, though, probably do get bought, and I would like there to be a little bit of a shake and bake. For those of you who are new to my broadcast, that means we shake out the week longs and then bake it back on earnings, as opposed to a pump and dump where we run up into the numbers and then it gets clobbered post earnings. Obviously, coming in on highs ups the ante and makes it a little bit harder of a trade to play to the upside. My guess, though, is that there's going to be some fear for the back half of the year based on tariffs, so traders are trying to cake and cash in now. I do ultimately think that the end of the year likely will see a rally, but sometimes we see some diciness mid-July through October. So stay a little bit frosty. I would raise stops as market rallies. It doesn't necessarily mean we have to have a pullback just because we've done it in recent years, but it does mean just be a little bit cautious, maybe put on some hedges here with the VIX super low. Speaking of the VIX, that to me has been the key indicator, and it has been the fly in the ointment for the bulls. However, today we did see a break below the 1623. Anything below there I think could continue to bleed out, maybe lower than people realize. Anything back over, and I would say over high of day now at 1676, and particularly if we got over the 1702, then I think the bears do have something to talk about, because it would be a look below and fail scenario, but as of now we are a look below and go below the 1623. Like and follow for more.